It's no secret that the government's tax system is a game, and there are those that have been playing the game, there are those that have been losing the game, and there are those that have been outside not even realizing that there is a game going on. In today's video, I'm going to teach you the entire tax system, and I really hope that you lock in with this video. This might be the only video where I really uncover the secrets that the government has been holding back from you. Without further ado, let's dive in. There are two different types of tax systems. There's a tax system for the educated, and there's a tax system for the uneducated. And to be honest with you, both systems are working perfectly. The uneducated are going about life, paying taxes, and just turning around filing their tax returns every single year, not really knowing what to do, and getting penalized the more money they make. And then there's the tax system for the educated. Those who are actively doing what the government wants them to do, they get tax incentives, and they turn around and get to enjoy the best parts of life. You have to make a decision on which side of the road that you want to stand on. Do you want to be on the uneducated side, where taxes are just so hard and they're so confusing and you're never going to be able to benefit from the tax code because it's just difficult? Or are you going to be on the side of the road where you've chosen to get the right type of education so you can set up strategies and techniques that allow for you to benefit from the government system? And I know you might be thinking this, those that probably make the most amount of money pay the highest amount of taxes, but it's actually the opposite. Those who probably make the least amount to middle class pay the highest taxes, and those who make the most amount of money end up paying the lowest taxes. And the difference is access to information. The wealthy class have access to more information than you do, and therefore they're able to leverage techniques and strategies within the tax code to reduce their tax bill. On your road to getting wealthy, it is your job to get access to the information wealthy people have been keeping behind closed doors. My YouTube channel is an outlet for you to get access to that. That being said, depending on how you spend your money will determine how much money you're going to save in taxes. The government cares about spending, and they will always prioritize those who spend the most. As a W-2 taxpayer, unfortunately, you can't spend a whole lot of money to reduce your tax bill. Think about it. As a W-2 taxpayer, you're working for somebody else. In order to really spend money to reduce your taxes, you can spend money on giving it to charity. You can spend money on putting it into your 401k. You probably got a student loan, so you spent money on loans, and you get to deduct your interest. But other than that, as a W-2 taxpayer, you have no incentives when it comes to spending money because the business owner decided to take a risk on spending money on you. He is the person, or she is the person, that has taken the greater risk. And that is what the government cares about, and they are going to incentivize the business owner. As a W-2 taxpayer, for many of you, when you go to work, whether you're working hard or not, there's a good chance that you're going to make the same amount of money on that paycheck on Friday. Am I right? And the government understands that. The government understands that you are used to help the business owner grow his business. And in return, if you help that business owner grow his business, there's going to be more tax dollars created, more money in circulation, more products and services provided to the world. And that is why the business owner will always get more tax incentives than the W-2 taxpayer. That being said, business owners get tax incentives, but they also have to spend money. And let's be honest, there's only so many employees that you may want to hire as a business owner in a given year. There may be only so much equipment you want to buy as a business owner in a given year. And there may be only so many vehicles that weigh over 6,000 pounds that you may want to buy as a business owner. So there becomes a point as a self-employed business owner where you have to decide, do I just want to keep spending money, or do I need to make smart investments to reduce my tax bill? I can invest my money into more people. I can invest my money into more equipment. I could even invest my money into more cars. But sometimes these investments aren't advantageous to the growth of the business. Buying Rolls Royces that weigh over 6,000 pounds or Lamborghini Uruses that weigh over 6,000 pounds is cute until you have no more money sitting inside of your business bank account anymore. So we shouldn't just be spending our money on cars that weigh over 6,000 pounds just to reduce our tax bill. We should be investing our money into assets that are going to turn around and pay us and grow our businesses while simultaneously reducing our tax bill. And this is when real estate enters the conversation. The reason why the government gives the most tax incentives to real estate investors is because two reasons. One, real estate is viewed as a business, and two, it is also viewed as an investment that you take leverage out on. Because you're providing affordable housing when you turn around and rent out a property to another person other than yourself, The government views that as a business. A transaction is happening between you and a third party. But before that has happened, you've already done business with the government, or at least the government's partner, which is the banks. You see, the government loves to print money. Most of that money is going to banks, so you could turn around and get that money yourself and spend it on the things that you need to spend it on. Normally, we see a lot of taxpayers using these credit cards, and they spend money on luxuries and things for their lifestyle that never ends up turning around and benefiting themselves or their businesses. It is short-term benefits when you spend money via credit cards. But what happens when you decide to take out a loan and you buy an investment property? You're using the L word, leverage, and you're taking out a lot of leverage. Typically, when you're buying a $500,000 home, you might put $100,000 down, 20%. You're leveraging the other $400,000. That's a lot more than leveraging 200 grand on a Urus or 300 grand on a Rolls-Royce Cullinan, isn't it? That being said, because you're leveraging something that is so big, like a loan on an investment property, the government is going to in turn give you a very big tax incentive called depreciation. That's the building's amount given to you as a tax write-off. You could take it over 27 and a half years. You could take it over 39 years if it's commercial. But here's the part that I want you to understand. The government now views you as a business owner. And if you run your real estate business like a real business, you could take advantage of the things that all other business owners get to take advantage of too. Writing off their cars, writing off their travel, writing off their meals, writing off a home office. You know, the things that you're already spending your money on. Many W-2 taxpayers that are listening to this are like, well, that would be nice, but how do I make it work for me? What you have to understand as a W-2 taxpayer is it's not about just leaving your W-2 job and investing in real estate or leaving your W-2 job to start a business. It's about using your W-2 job and the income from your W-2 job to create other opportunities for yourself that thus offset the taxes for your W-2 job. This is what real estate is capable of doing for you. Because the government views it as an investment and a business, you can leverage real estate to be business oriented for you and create business deductions while simultaneously parking your money in a safe place. You're not giving the money away to the government. You're not giving the money to your 401k that you can't touch until you're 59 and a half. You're giving your money to your investment property, and it's parked inside of your investment property. Sure, is it a little bit illiquid? Absolutely. But I would argue that real estate has been known to appreciate year over year. It's been tried and true, and it's a hard asset, and that's what the government cares about. Why would the government care so much about hard assets? Well, they know if you default on your loan, guess what? They can go and take that property. That's a hard asset that's sitting in a location that they can physically touch. Have you ever heard of a short sale? Or have you ever heard of an auction or a tax sale? Well, sometimes when taxpayers are unable to pay their property taxes or unable to afford their mortgages, these properties go right back to the banks, and the banks will short sell that property, or the banks will provide a tax deed and you can take over that property's property tax payments. Many real estate investors who go into real estate, unfortunately, go into real estate taking out too much leverage. They're over leveraged. They put these 3.5% down payments down, and then they try to convert them into investment properties. And then all of a sudden something changes, they lose a tenant, and they're having to float for 5 or 6 months covering that mortgage. And then real estate becomes this whole thing that they never want to do again. But if you're a smart real estate investor and you set up your business for success, you set up your property to cash flow, you buy real estate in the right places, and you've done the math around the depreciation, you can turn real estate into a vehicle for you that offsets your taxes, puts food on the table for you and your family long term, and can end up being a great wealth building tool for you to park your money in. I am always going to be an advocate for real estate because, let's be honest, there's only so many vehicles that you can buy that weigh over 6,000 pounds. I can only tell you to max out your 401k so many times. You can only give so much money away to charity, and no one really likes oil and gas and solar as much as they like the real estate. So if you're down with some of these strategies that I'm talking about, you're going to make sure that you align yourself to get into real estate. If you need any help on finding your short-term rental, qualifying yourself as a real estate professional, executing the cost segregation study, setting up an LLC, me and my team at Tax Alchemy are here to help. You can go on our website, listen to all of our testimonials, watch our videos around how we we've been able to help our clients, because this is what we do full-time as tax strategists. The most important thing that you can do is offset the biggest expense you have. But in order to do that, you have to get the right information. The difference between those that are able to avoid taxes every single year and those that are constantly getting beat up by Uncle Sam is the amount of information they have and what they do with that information. My name is Karlton Dennis. I'm here to empower you to leverage the tax code. I want you to do something for me. Like, comment, subscribe. You know what it is. I'm going to put out another video for you just like I did this one. It's going to help you save more money on taxes. I want to make sure that you're here for it. Thank you so much for making it to this video. I'll see you on the next one. Take care.